Hello everyone and welcome back to ABG's Investor Days. My name is Carl Bokvist and I'm an industrial analyst here at ABG. With us now we have the pleasure of hosting Piezo Motor, or soon to be called Aktier, and the CEO Anders Kottenauer. Without further ado, Anders, thank you for joining us, and please.
Thank you. Pleasure to be here. Okay, we'll introduce a little bit the company as a starting point. We have been doing quite a bit of transformation of the company over the last, I would say, in particular, the last 12 months, but we started even before that. So what we do is we are building a company around the increasing demand for precision, around movements and positioning of physical objects. And we also are leveraging or using the increasing demand for really compact solutions in terms of both weight, size, and how we integrate the solutions. So this is a global demand, but we really have a clear focus on certain markets and applications. And we can expand those, and we will expand. But for the moment, we have a very clear strategy moving forward in how we expand the business. Part of that is to expand our global presence. We do that through increasing direct sales. So today, historically, we have had quite a lot of indirect sales in the company. We will keep doing that to a certain point for certain brands. But we're really also expanding our presence. As you can see here a little bit, if you look at our global map here, you can see we have now 3 businesses, 2 based in Europe, 1 in Finland, 1 in Sweden, and also now recently 1 in the US. So based on that, we are also expanding the local presence in those entities in terms of operations, engineering, but we're also adding sales resources in the field. So this means establishing in DACH region in Central Europe, which is a really important part for the business, as well as in the US, East Coast, West Coast as well. We also have Asia. Today, it's a really distribution market for us, and we will continue with that for the time being, but over time, we will also establish ourselves in that region. So really for us, the other part that we expand is the product offering. We have done that through acquisitions, and we also do it through our ongoing platform development. New products will be launched. The final step is also to go into new applications, but as mentioned, we have a pretty clear focus at the moment for certain key applications, and we will step by step expand that. If you look at the financials, we have had, these are the pro forma numbers, we have had a big change over the last 12 months. So we have today about 150 million SEK for the full year 2021 for the 3 entities combined. And if you look, the organic growth here is purely based on the existing business we had in 2020, so that was about more than 30% organic growth. For the total businesses, we also have had very good organic growth in 2021. Q4 was in particular strong for us. We've had very good demand at the end of the year. We have also been able, if you look at pro forma level, to have a very good profitability for the business. So we're getting up to the levels that we have been that we see as we have the potential in the business for to be really above 25% EBITDA levels, something that we really think we can achieve by the scale we're building into the business. So we have a very good base globally of the customers across the region. So the entities in Sweden and Finland are pure exporting companies, but the key markets, as mentioned, US, Central Europe, and in Asia. We have about 500 existing customers today, very good customers, growing base. And with those customers, we have a very high level of recurring business in the sense that once the products have been designed in, we have a good, long-lasting products with these customers. So for that reason, it's quite stable, the business. We see fluctuations over the quarters, but the trend is clear. We have very good organic growth starting to build up in a company with a very good pipeline. So as mentioned, we're changing the name of the company. There's actually the reasons for that is that, as mentioned, we have changed quite a bit over the last 12 months. So this is a name that reflects better, in our view, what we're building up and what we want to become. We also for us, it's very, very important that we keep the brands that we have established. They have a very good market recognition in the different applications where we're present. And so we will keep existing websites, we will keep the brands, we will develop the brands. But on a corporate level, we want to have something that holds everything together. We are not a company that we really want to integrate the businesses we buy. We want to combine it with high level of autonomy, but we really also want to make sure that we can get some scale out of this one. And on that, we will do in some ways on a corporate level. So really, I don't think the customers will see a big difference initially. We will keep the existing businesses as they are, but step by step, we will do new products together. Particularly on the commercial side, we will have much more shared resources than we've been able to do before. So it's really, I think, something that's going to step by step change our profile towards the market as well. So what markets are we really focusing on at the moment? We have four. We have what we call life science instrumentation, which is, as an example, can be cell manipulation, cell handling in different contexts. We also do have a pretty good pipeline and market presence in medtech. Could be surgical robots and similar things. Semicon is historically a key area for some parts of our technology. And there we have today a very good presence with some of the biggest players in the market, with products that I think have a very good potential to ramp up pretty well in the future. And then advanced industrial, the different types of optical applications, where we also have a pretty good brand presence and recognition of our capabilities. But in addition to this, we also have established a high volume market approach where we address certain application where we know there's a very big benefit of certain compact solutions that we have. Not only compact, it can be very cost efficient as well if you look at the total solution that we offer. And but we have also spent quite a bit of time on developing the model to go to market there, where we really want to have very close partnerships with certain key players that can really help us to expand. So if you look at the mobile phone side, as an example, for mobile phone optics, we have entered into an agreement or partnership with a very strong player on that side to really develop that business step by step. If you look a little bit more in detail on the markets, it's what we currently serve. It has about 10 billion SEK market potential on an annual basis. But the individual segments, we're down into sub-segments, which in themselves have very good growth and also very good potential for us, with not only to capture market share with the new technologies that we offer, but also to enable some applications that are not currently done. So for us, we really see this as markets that tend to be quite long products, as mentioned, long life cycles. And you can also have niches here where you can have a very good profitability level. You can see we often have difficulty sharing company or customer names, but you can see some of the names here in each segment, which are either companies that we are already working with today or supplying today, or companies in our pipeline, or companies that we are addressing in the future. It's just to give you a sense of what type of customers are in each area. So the brands, we currently have 3 brands. I hope to add more in the future and give you a sense of what these brands do and how we work together. So as mentioned before, for us, it's really, really important that we find synergies between the companies that we buy. And sometimes that can be through technology, that can be through how we go to market. And it can also be on the new solutions that we can build together with these entities. And we have 3 today. One is Piezo, which is the origins of the company, which is really, I would say, the most well-known or best, broadest product range in the market for piezo-based actuators. And then we also have SensaPex, which is really about motion control. We want to push that into ways where we can automate a lot of manual processes today in some industries, like, for instance, in life science. And then we also recently acquired a company in the US called TPA Motion, which is origins really about linear motion and solutions around that, but also a system integration. This also gives us a very good presence in the US, very good customer base, and something we can expand or planned US expansion around. So meaning adding more technical resources. We also have manufacturing presence in the US, etc. But as I said, we really drive hard on IP, we drive hard on R&D, and some of these things we want to share across these businesses. So a little bit some application examples. You can see on the Piezo motor side, as an example, this is a medtech solution. It's about tissue diagnostics, where we probe a specific cell, in this case to see if it's, for instance, cancerogenic. On the SensorPEC side, it's about micro injections on the cell level, which is super precise, and you need to have very, very high stability when you do these type of operations. Sort of the TPA motion one is, in this case, is also life science oriented. It's a microplate handling. So we do have today a very high focus on the medtech life science, and I think looking at our pipeline, this will continue to grow. So product expansion. So we have really ongoing today. We already mentioned compact drives, which is something that we use for, as an example, the mobile phone industry, but also our core markets I mentioned before are really also something we want to push these solutions out to these type of companies that we have already as customers or in the pipeline. We also have lab tech automation as mentioned, automation of certain quite manual processes today that we think we have already existing technologies for. They can be very useful for data capture in some, for instance, in life science. And then stages, which is used in many different industries, and that's actually simplification of integration and helping our customers get scale. We have quite a lot of large customers, even though they individually have quite relatively low volumes. It probably can be from a few hundreds up to a few thousand for many of these customers, even if they are very big companies. So this is a way for us also to get more value out of our existing core technologies. So trying to explain a little bit our value chain and business model with this slide here. It's actually simpler than it looks here, but what we have been doing, originally we come from, I would say, an advanced component level. You see that a little bit further down in the value chain. And step by step, we want to increase and move forward. The reason for that is really there is a customer demand for it. As mentioned, even if customers are big, they might not have the scale themselves to achieve it. And it's also, in many ways, quite a complex know-how that we have that it's difficult for many customers to have themselves. And the second thing is also that we see a way of capturing value of some core technologies, basically adding more features around some really core technologies that we have to get a better value. You can get like 3 times X component level in value when you step up in the value chain. In some cases, we even want to go, or can we already do today, go even into really deep into some application level with more total solutions. And we have ongoing strategies around this as well. We do this in a very select way. It has to be fitting, of course, with the market situation, with the customer situation, but there are some really good opportunities for us to do that. And then, of course, we have I mentioned already, the high volume ones. Some of these technologies we will use across the markets that we see here, but also then we really find the partnerships to really scale up in some cases. Some things that for us it can be it's difficult sometimes to mix the business models, but it also gives us access to certain applications that it's going to be very, very difficult for us to do ourselves in the short term at least. Particularly today when you have also the COVID situation in the mobile phone side, where it's basically very difficult to even get access to be present in the countries. But through the partnership we have established those channels. If you look then at really what is driving our organic growth. Organic growth is super important for us because it really scales the business. And so we have good niches we're operating in with both very potential for very good margins, but also good growth. We do have the ongoing expansion of our product range. So we do that through acquisitions. We do it organically as well. Then, of course, step by step move into new application areas. But really a key thing for us that we have seen a big shift in not only driving sales, but also how we can control the sales and really control how we really get knowledge from the customers, is the increased focus we have on direct sales. So we're really pushing to have that. We have a good partnerships with our distribution channels, but really it's important for us to be close to the customers, both with advanced technical sales capabilities, but also technical support. We try to do most technical development R&D in our core R&D centers, but there will be certain application expertise that we need to have very close to the customers to speak their language, so to say. So we see the benefits of this model, and it's working really well for us in terms of driving growth. So final slide here, the investment case. So we have a very good base, a good customer base, more than 500 customers globally, that in themselves has, they have very good, they're in good markets, they have good growth themselves. We can also expand with new products to them. We have a very good pipeline, MBO pipeline, that we see come to fruition over the next few years. We also have, what we have in addition to what we can call the base business, if you want to call that, is really these new high, I would say, high volume application areas that we see could have a very good impact on profitability as well. Specifically, if it's a licensing model where it basically goes straight through as a gross margin. And then we have an active M&A agenda. We closed 2 deals last year. We have, an ongoing pipeline of M&A that we can hopefully do in the future. But of course, we base that on many different the conditions in the world, etc. as well. But there is a good potential to both consolidate in some application areas, but also to add new technologies and market access to the business we're building up. And then finally, I think the very important for me and for our board is that we can also show profitability in the way that we see the business scales well. We are actually quite lean on the corporate level, but also in the businesses. We are very efficient, I would say, and quick to adapt to both new market conditions, but also to support our customers. So I think we are, we have a very good potential to have a good EBITDA level for the business and to keep that moving forward. We don't have any price pressure for our products. I think we also have an opportunity now if, for instance, raw material price increase and similarly, we can push that forward to the customers as well. So I think from that perspective, we are in a pretty good position. So thank you.
Thank you, Anders. So the first question is just on, given the portfolio structural changes of the business recently, and you highlighted the pro forma business overview of a full year. I think the margin was even 30% in Q4, and the margin target there or potential of 25%. How should one think about it? Should it be that the TPA business continues to drive profitability even further, or is it that the legacy Piezo reaches the kind of scalability that you're aiming for, and that will be the...
That's a good question. I think the TPA business for sure has good potential. We see good momentum in the US, and I think that will continue. That one part. The legacy business is really, that's a scale business. So we're very up to the place where we really have good growth, where we can also see really the scale coming into effect. Where we had COVID impact has clearly been the SensaPex business because of the access to the certain type of customers. That is something that I think step by step will improve now throughout the spring. But overall, that business scales well as well. And where we have there is a really push into more OEM business as well that we have new platforms for. So I think it will be a combination to drive profitability. But we're also really pushing to share some core roles and capabilities across the group as well, so we can spread the cost across.
And the potential partnership there within telecom, it's something that's on a testing phase, so to say, right now, or a commercial partnership level. But so thinking about the timeline here.
Yeah, it's a good question on the timeline. As always, we We have a partnership, and so there's actually at the end there's a first level, or is the OEM that really sets the timeline. But then we have these called module manufacturers that are really also setting a timeline. But we have, from our partnership that we have established already, we have a very clear commercial push for this, and we have ongoing customer activities right now. We have a platform that we can use as a demo, and to be clear, we have developed this together with our partners. So it's some technology from us or a big part, but this was a very big part from them in terms of drive electronic sensors and similar things. And they are highly capable partner, and with very good access. But it's very difficult to talk about timing. It's because of it depends on, at the end stage of the OEMs when they launch new products, but then also when we can fit into the new technology into different platforms. So it's really difficult to tell, actually. It's not as far out really far out, but it's difficult to tell. But it's progressing, and there's a lot of activities around that's happening.
And you highlighted a few ways or areas where you potentially could see synergies between these three businesses. But the initial rationale behind the two acquisitions, how did you come across them, and why you felt that they had a good fit with your business?
So it's really, I would say, two things that has been the rationale for it. One is that we want to move up a little bit in the value chain to have access to more, that we can do more platforms towards our customers. That's part of the SensePX side, but also TPA. TPA is also a way for us to access the US, to have a much bigger presence there. And they also have a very good customer base that we can expand other applications with. So I think just a combination. But what is interesting is that all of the three of them, we can really access the same end markets with these applications in different ways. But the potential is there to share resources in terms of sales, commercial expansion, marketing, and all these things. So it's something that we really can scale faster with these three companies.
And historically, the Piezo motor side has been an R&D intensive business with a lot of investments. Do you foresee that the profitability from TPA, for example, will be able to cover the group's investment needs, or how should one think about capital allocation?
We clearly see that cash flow wise and investment requirements, we should be able to cover that through the group here for sure. What we're doing on the Piezo motor side as well is to be, since I started there, we have made quite a big changes, and really to be more focused on creating more standard platforms as well on that side that we can then leverage faster. So that's also part of the plan. Become much more efficient in terms of capital allocation in our inventories, and also how quickly we can put solutions in place for our customers. So, but as an example, between these three companies, we can really share some core technologies like electronic platforms and things like that.
And just you mentioned here at the end, you believe that you had good ability or potential to continue to adjust prices to what we're seeing currently in the world. But on the supply chain side, how have you felt this impacting your business? What do you see going forward?
We have been able to manage it quite well so far. We have increased some stock levels. So parts of the business, for instance, the SensePX side, have had some more complex, some chips solutions and other around that we need to buy quite well in advance. But I think we managed it quite well so far. I personally think that some of the supply chain issues will become better in the near term, because I think it's also been a bit of a panic buying by many different customers in parallel in the world. So I think that will probably calm down a little bit. But of course, there might be other supply chain issues. But I just today was making sure that we had access to certain raw materials that we need in our production, as an example, with the current situation. So those are the things we keep an eye on.
And the final question, you mentioned a few customer areas. Healthcare was one, but semicon was one. And here, just for people who are interested in looking at your business, is it an exposure towards the investment part of a semicon market, i.e., the significant capex programs that we have been reading about for quite some time? Is that, the kind of driver that benefits you as well?
Yeah, we supply into the basically the manufacturing equipment that goes into that market. So we would be, you can see it as tier ones into the, to the big players in that sense. But we were quite well diversified in there. So we are not, we do different things, and the end applications might be different. So it's not just one single thing that we're supplying into, it's different things. So I think but I also see that that industry has changed quite a bit. It's largely driven today by memory demand, as an example. So you have much more stable investments going forward. I've seen that over the last few years at least. So I think this feast or famine has kind of disappeared a little bit, and at the moment there's quite a big, good demand in that market for across the board, I would say.
With that, Anders and the Piezo or ABGSC, thank you very much for joining us.
Thank you. It's been a pleasure being presenting here today.
Yeah,
Thanks.
Take care.